Good morning, traders. Today is the 29th of July. This is the Plan Your Trade video for Monday, the 29th of July. And we are looking at a flat down day today in trending mode. Now, we have not seen the biases change direction. They're still technically bearish. We are in what I believe to be a Vortex Rally mode, which means I believe the markets will build strength, rally back up into this 560, 565 area, and attempt to move dramatically higher over the next 6 to 12 months plus, meaning throughout most of 2024, the rest of 2024, and most of 2025, if my analysis is correct. So I'm expecting a flat down day to be in this range. I drew this yesterday in yesterday's Plan Your Trade video, and the reality is we're currently at 446.91 or 546.91, almost 547, and we really need to see price get above this 555 level, in my opinion. So I'm watching for a rally back up to this 555 level and then eventually trying to break through by Friday. That's what I'm expecting. We are going to have to get above this make or break level that I talked about last week, 547, 548 actually. And we're close. We're at 547 roughly right now. So getting above this make or break area, which is this level right here. In fact, I'll draw a line, make it even clearer for you. This is going to be our make or break level on a lower level. And then we have our large kind of make or break level right in this area. And I'll make that a bright blue. So understand that we are looking at this initial level really at 548, and then a more pertinent level, more critical level up above this 555 level. And I think what we're going to see this week is a pretty solid melt up, followed by a rotation down on Wednesday, reforming support on Thursday, and then potentially a good solid rally on Friday. We'll see how that plays out. Obviously, what I'm calling the Kamala crush. If you followed my research and watched my last video, you'll understand what's actually taking place here. And it was related to global politics. It was related to US, but more so what we're seeing here, folks, is a collapse in foreign market expectations. And I believe that's due to the ongoing battle for the US politics with Kamala and President Trump and what's taken place actually over the past 2.5 weeks. Remember, we've had the Trump assassination attempt, we've had Biden dropping out, we've got all kinds of things taking place, which is creating a bout of uncertainty. Now, if we take a look here at the weekly chart, you'll see that we've got a very deep pullback. We are, as I showed earlier, in standard deviation channels, which are reasonable. I think we pull back off of this dashed orange line low, which we've crossed down in this area, substantial low, and we rally back up into this 560, 565 area, attempting to vortex up into this new rally phase. Let's take a look at the QQQ. And similar type of environment, rebounding off of this deep moving average, volume weighted moving average, really moving back up into our congestion period. And I would be looking at this 468 level as a make or break level. We're at 466 right now. That's this level here, make it thicker. And then a secondary level that I would want to see moving higher would be right in this area, 479. Once we got above this level, this 479 level, then I think we're off to the races, back to the upside. And I think it's only going to be a couple of days, 3-4 days, maybe 5. But I don't think it's going to take long before we get back up into this level, really reverting back up into the mean, so to say, And then I think the Vortex Rally takes place. And remember, the Vortex Rally is something that I believe is taking place as a cause for um, essentially capital function. This is really more about what's going on globally with regards to capital controls, capital function, how the currencies are playing out, how expectations are playing out. And I really do believe that we are going to be looking at a very, I'll shrink it down here and show you, but a very solid vortex rally that's going to be kind of like this. And I call it like a tornado in the sense that it builds strength and continues to cycle through the same process going higher. But if my analysis is correct and this vortex rally sets up, we could be looking at a very strong melt up phase going well into the late part of 2024 and into early 2025. So be aware that we could be looking at a very strong, aggressive upward trend or bias just simply because of what's taking place globally. And that is my opinion. Again, I'm gonna stick to it until I see the data change. And this is factual data. It comes from not just quote unquote my opinion, but it comes from data that is telling me that there's very strong demand for US assets and US dollar based assets related to the uncertainty taking place throughout the world. Okay, lastly, we'll take a look at Bitcoin. Bitcoin, very solid move here. You remember I highlighted that we were going to find support at 57,000. It was so funny. Everybody kind of wrote me and like, ha ha ha, you're full of crud. But now look, we're back up to 69,000, 70,000. And I told everyone that we were going to be targeting this 90,000, 91,000 area back weeks ago. And it looks to me like the melt up phase, the vortex rally, again, could carry into all hedge assets, gold, silver, Bitcoin. You could see this melt up phase really explode over the next 6 months. And again, vortex rally. What is happening here is traders are actively seeking safety and security related to underlying global market conditions. And in order to find that safety, they are going to move into the best hedge assets available to them: gold, silver, US dollar based assets, Bitcoin. I'm sure there's other stable coins backed by the US dollar, likely as well. I would expect the US dollar to continue to attempt to climb, maybe back up to like 105, 0.70, maybe 106. But again, I would expect this vortex rally to take shape over the next 60, 90 days leading into the election and then possibly really solidifying into the election. It really depends on what goes on and who wins and what the expectations are right around the November election time. But given where we're at and given what we're dealing with, we need to play what's in front of us, not necessarily try to stand in front of the market and expect the markets to go down. For example, this was a good example. Markets went down, Bitcoin did. Everybody expected it to collapse. Well, you don't stand in front of a train. You get run over when it changes direction. And again, that's kind of what happened here. When it changed direction, we got run over. And, a lot of people did. I happen to be on the right side of it, which is great, but that's not always the case. So, when we're in this mode now, this real rally phase, you need to just stand back, realize that the rally phase is taking place, and we need to then let it, play what is in front of us. So here's our daily chart, and you can see very strong rally back up to new highs or recent new highs. And we have really rallied out of this consolidation phase. So up to 99,000, 94,000 roughly is my prediction for Bitcoin. And we will go back to the SPY, end the video here. So here are your SPY cycle patterns for this week. And again, this is a shakeup. The SPY cycle patterns are very good generally. Okay. When we get into some kind of a massive news event, the SPY cycle patterns do not operate off of news or crisis events. They may, in some ways, kind of predict some of it, not always, but they are what is called a core underlying psychological based on Gann and Fibonacci cycles. So they're really more Gann Fibonacci cycles that are setting up, not news or critical political or geopolitical event driven. So that's why we can get this type of a move, which is a flush out or a shakeout based on, Biden backed out of the race on the Sunday. That on Monday, Tuesday, we had really tentative news about Kamala Harris, and then all of a sudden on Monday or Wednesday, she was locked in, and now all I see is Kamala Harris, Kamala Harris, Kamala Harris in the news. She's anchored in here now as the new candidate, and that's going to cause a lot of changing expectations. Why are we going to move into this melt up? This melt up is very clearly a hedging against risk. So we will leave most of my other crazy lines out here for now. I'll get rid of some of these when I'm off the video, and we will see what happens today. Again, my expectations today, if I come down here on a 30-minute and show you kind of what I expect, we're going to be looking at a flat down day. And a flat down day normally would mean that we would see some sort of a rolling price pattern. So we're going to likely open in this area. So I'll highlight this area. And then we're likely going to see some sort of a flat down day, meaning just kind of moving inside a flat, narrow channel. And I suggest today, unless we get some serious trending, today is going to be a day where most traders are going to find it difficult to try to see a market trend. It's just not going to be very visible. Now, I have been working on these tools. I highlighted them over the weekend. These are my new pressure system. Let's go down here to the ES on a 2-minute basis. And this is going to give you a lot more opportunity to find trend. You can see here that we've got these overnight trends very clearly bearish. Remember, we've got the Bollinger Band trending system, which is really designed to be kind of a general trending system. But still, you can see how we're catching these trends. We're catching these downward trends with the pressure exhaustion system. And then when you add in the main pressure system, which let's get rid of the Bollinger Bands here, you can see that we went bearish right back over here very cleanly early in the trade, stayed bearish all the way through this trend, rolled into bullish trending right back over here, which aligns perfectly with the exhaustion system turning bullish over here, rolled back up into resistance. These are Fibonacci resistance support areas, then rolled back into bearish trending right here, able to catch a nice move here. Same thing again, clearly brought here with exhaustion. That's the cool part about this new exhaustion system is it labels and clearly tries to tell you, hey, we're running into exhaustion. Look, this is where you want to try to protect your trade, lock in your profit. Same thing happened here. We ran into exhaustion right near this low. We rolled into sideways trading. Didn't really give us any opportunity. Rolled back into bearish exhaustion here. Tells us again we're running out of steam on this trend. And then we rallied upward, ran into exhaustion here. Look at how it stayed in exhaustion throughout this uptrend, rolled into further exhaustion up here, and then rolled into more exhaustion up here. Very clean trends. And again, you take a look at the Bollinger Band system, staying very solidly long through most of this trend. Little bit of consolidation down in this area, then back to long we go. So we're going to have a pretty good run here, I think, over the next 5 or 6 days. And I'm going to be doing these cycle patterns not in 2-3 week increments. As I mentioned to you, they get very difficult to predict 2-3 weeks in advance. It's much easier, much more logical to try to do 1 week or maybe 10 days in advance at a time. So there we go, guys. This is our layout. And remember, today is going to be fairly well flat down. Not a lot of trending, in my opinion. Tomorrow, we're looking at a good, solid rally day, in my opinion. Okay, guys, that's it.